Good day, everybody. Brian here, quantlabs.net. All right, so I have been posting all around my own website, quantlabsnet.com. I still got to get that right. Anyways, I just wanted to let you know I'll be slowing down the videos, the content for sure. All my groups will slow down until the first week of October. So, what's going to happen after that? First week of October. I've been having quite comparatively to the levels that I've seen over the years with YouTube. Since I started talking about more of the C++ high frequency trading stuff, there's been a couple hundred views to me. That's like going viral. It's just that's how bad it's been for the years. But there's definitely showing signs of demand for this. I've got the free book. Again, you should see go to the link below to get that along if you're interested in the what I call the easy path as well, for even for non-technical people on TradingView, just quantlabsnet.com, think slash registration. And I don't release anybody's info on there. And you'll get this book. In that book, you will find all the mechanics, all the technical nitty gritty, low level stuff that goes into these trading systems. And they're pretty well, you'll see how vast it is. It's over 200 pages of different descriptions of what goes into trading systems, specifically at high frequency trading firms that trade in the billions. So knowing that, um, it's fine to know about those systems, but you want to be able to apply those to live trading. So as I know, I've been using TradingView for about actively, I'd say definitely a year and a bit more, just over a year, let's say maybe 2 years. It's an excellent platform. I plan to continue using it until beyond 2025. Um, but right now, because of the audience of viewers like yourself, kind of hinting that this is what they want: C++, HFT, high frequency trading stuff. And as I said, it's one thing to know about those on the technical front, but how do you apply those to trading systems with actual trading strategies and trading um, targets and whatnot? So the place that most of that's done is in futures and options. With the timing of the markets, I think we are in August 20th. Way I look at the markets, the equity markets are not going to be the priority anymore. For the last 10 plus years, we've had pretty easy money on the equity space, the stock market just generally going up. I think that will slow down. And a lot of the area to continue to make money, whereas maybe the stock market might flatline, it may drop and may not recover. Nobody knows. But it's good to know that the futures market, the options markets where a lot of these firms trade in. If you ever wanted to join my quant elite, you'll know in that group that I've kind of started uh, uh, what's the word, curating a lot of content on there from posts from places like Quant Stock Exchange. And these are institutional level questions. A lot of it has to do with options. A lot of it's options, and there's the occasional futures. Uh, so that tells you there's institutional questions going into that quant related. Um, and a lot of it is involving C++ and Python. So that gives you a clear indication that that's where a lot of the institutions are and where they're investing, and obviously using C++. So a couple of things that can come out of that is if the markets go bad in the stock markets, the crypto markets have been not that great over the last couple of months. And there was a crypto winter last year, which was quite long. Trading opportunities are not going to be as strong as you want. But when you get into the futures and options markets as an asset class, those are really good because futures market's been around for over 100 years. And the nice thing about that is, um, options came out was one of the other derivatives. So they will continue to do well. And that covers everything you can imagine: currencies, financial products like the treasuries. And that's going to be another big one as well, as people will watch the treasuries market. Obviously, I think the commodity space is going to be a big one, specifically around gold, silver. If the well, no doubt, there's going to be uncertainties in the market, so those are good places to be. Um, Agriculture can still do well because we all got to eat, so that doesn't matter what happens in the economy. So those are future contracts as well. The volumes are not quite there, but when things dry up, the agricultural will be looked at for sure. And there's the standard stock markets as well, indices globally. And the other one is currencies. Currencies is going to be around. That's 4 trillion a day, so that's not going to disappear. So you get the idea that both futures and options, there's going to be lots of opportunity there. Also to apply things like C++, Python front ends to it, prototyping, yada yada. I want to build out a community for this, specifically built around the what I've already identified as the free course to use if you're new to it to learn about futures and options. It's not that easy compared to stocks and even crypto or forex retail trading, I should say. Um, and it's an institutional level course. It's put on by UC Davis on YouTube. It's free. If you want to know what it is, it's pretty simple to search on YouTube. UC Davis Futures and Options course. That's it. And you'll find that. So I want to use that as the base to build this off of, get the C++ code up with the basically systemize it. And 'cause it's all about targets. And then a lot of it at the end of the day is driven by supply and demand in these markets. And they can be predicted based upon what you see in the options market and the options space. And when certain prices are hit, certain targets are met, then you can enter, exit. It's not very well, it is complicated, but it's a lot easier to forecast than what I'm doing right now. And it's just a lot more lucrative too. So I'm looking at that, dude, and I know a lot of people from my YouTube are like anything on interactive brokers does very well. And to be truthful, with interactive brokers, if you look at on Google, interactive brokers protecting clients as a search item, search key phrase, you'll see how interactive brokers protects their customers. They, from what I read and try to confirm, here in Canada, they will protect you up to $900,000 or 800,000 in cash, and then they will insure your trading account, like your securities, basically up to 29 million. So try to get the equivalent of that search result with your bank, wherever you put your money. You will not find that transparency at all because it pretty well doesn't exist from an industry standpoint. So if we go into a market where the financial system just goes squirrely, um, you know, I'm sure you already know your banking is not going to cut it. But with securities and cash, being in interactive brokers, it seems you can because they tell you why. Because they're insured by two companies. Obviously, Lloyd's of London's the big one. Um, so yeah, the transparency is there with interactive brokers. So that's kind of like an insurance policy uh, to protect your account and your securities, cash and securities, which banks don't protect securities from what I've been seeing when I've done my research for both Canada, UK, and US. There's no insurance. Got no government will insure it, and not up to that amount of up to 30 million or 29 million plus almost a million in cash account. So interactive brokers is a good broker to be with for that. And as I said, do that search as I said. So that's the future. What we're going to do is we're going to start building out a community. Um, when I'm back on first week of October. So I'm hoping to still continue doing posts here and there as I can over the next 6 weeks. So today is, as I said, October 20th. So um, don't know what the topics will be, just whatever. It's be real random stuff. I'm not doing any technical stuff over the next 6 weeks. I'm not going to be looking at the market. I mean, I'll be looking at generally at the markets, but I'm closing all my positions on my smaller account just to protect it. It's done okay. It's up about 4 to 6%, depending upon. I mean, I had a Walmart position that did quite nice, and I have had some nice dividend income ETFs that done pretty good over the last 2 weeks. So I don't know what's going to happen over the next 6 weeks. Maybe the markets might go sideways or decline a little bit. So I'm okay there, and then pick it up again come October. So from the trading perspective and the technical, I probably will get more serious in the um, interactive brokers futures and options market. I'll be keeping it fairly small, but I do believe that the account size used to minimum start, from what I understand, to do it effectively will be about 25K US. So that's you can do it with smaller contracts, but it can hinder you because of the margin requirement. So when you put on a future contract, you also have to put an additional on for the margin requirement as well. So I'm going to look into that, but that's going to get real serious over the next well 6 weeks out. But I'll be looking more into that and documenting that as well. So if the markets go bad, you still have opportunities in the futures and options, as said. Specifically, currencies is a good one. As I said, 4 trillion a day is trading currencies, and there's still, I think, the markets for gold, silver will do very well, along with probably treasuries might be good, fixed income for sure. Indices might do well. I don't think they'll be as a high priority. Whereas there's the more sound money coming in that will be will be focused on. If you look at if you're part of my membership there, um, and you're on one of those groups, the Quant Analytics specifically, you'll notice that there is a bigger interest in gold and silver. Gold right now is hitting an all-time high. Silver's coming back as well. And that process and what it's it's kind of a proprietary one. What I've built, where I'm using Awanda data, and I'm able to assess where the money's going, and that's one of the reasons why I like Awanda, the forex broker, using CFD and forex. I call it the poor man's gateway to looking at what the real markets are doing, and it tells you what I call hot capital flow. The hot capital flow will tell you exactly where they're parking their money over the next while. And from what I'm seeing, a lot of it's going, as I said, in gold, silver. A lot is going into that. Certain forex or currencies right now. For a while, it was euro. Seemed to be the U.S. dollar is not has been declining, so it's now euro has been strengthening. Um, and just knowing about those type of trades, and those are trends. They don't last very long, but they're trends. Oil may come back. Natural gas has been doing okay. That could do well. So those are sort of things that people need. Those kind of commodities that people obviously need as the winter comes on. So that has really nothing to do with stocks, right? So if the stocks do come off, which there could show signs of it, then there's those other commodities that I've already mentioned, along with the currencies as well. Now, in terms of crypto, crypto's a little bizarre. I was watching one video, and one guy said that basically the whole crypto space, or at least the size of Bitcoin, is the size of Microsoft. So you can imagine when you take all those big companies, Nvidia, Apple, Microsoft. Bitcoin's only the size of Microsoft. So it's just really tiny comparatively. When you take a look at the TradingView on the futures market for specifically Bitcoin and Ethereum, it's not it's not registered. So a lot of people are putting money into the crypto ETFs, and I see the amount that inflow and outflow. It's pretty high, so that's why it's been, I think, pretty shaky and very volatile. So there's a lot of less interest in crypto at this point. If there's like some kind of financial meltdown, then yeah, maybe crypto might spike, but so will gold. But the pullbacks and the swings are in crypto are fairly extreme. Anyways, back to the C++. So knowing these sort of patterns, understanding the fundamentals, and specifically when you do this course, as you see David's course, you'll have a much better, with confidence, be able to to quantify what's happening in the markets. And the better thing is when you start to access all of that from a C++, maybe a Python point of view, using a really good broker like Interactive Brokers, I think it can change your world. And then when you're able to systemize it, that's what you want. And the thing is, even if this is something you want to do for career, this is something that you can build out, and you can put that sort of thing on your resume. So when you show that kind of passion, you've shown the live trading, along with what I said, to Mark D, our student, star, I guess you could call him, at the NYU. He agrees, and he sees that, and he's getting his certification. So if you're at his age and you're, I don't know, 20, early 20s, in that prime age for university, and where you're going to go to do your graduate and maybe your doctorate, your PhD, to have the live trading, to have the C++, Python under your hat, uh, and you show that on your resume, that will put you a cut above everybody else, because now you're competing against older folks that have worked in this type of industry for a long time. And if you're at that junior level, the AI is not helping either. Okay, because you're not as valuable with somebody with 5, 10 years experience. I hate to say that, but you can circumvent that by definitely, learning about how to systemize processes when it comes to the institutional level things like, the markets of futures and options. So I've already talked about the market conditions right now as of today, August 20th, and that's about it. So hopefully, go on the website quantlabsnet.com, look under learn, and or the link below for the registration. I'll try to send out emails here and there over the next 6 weeks, but that's what I'm preparing for, to really jumpstart a private community around this, about the talk of C++, Python, and quant trading as well, because there is stuff out there, but I'm not going to say it's useless, it's worthless, but I want to bring in a private group. There have been groups, have come out over the years, and a lot of people have taken away some great knowledge, but they get shut down, and I don't know why, because maybe the owner gets into consulting, or maybe the owner of that group loses interest and kind of gives up. But there's some really innovative stuff that comes out of these kind of groups. So I want to start one for that. It's not going to be cheap, but it's not going to be expensive. But as more people come in and the value builds, then as I said, that will definitely, um, go up. I'm also going to, continue in my live trading. It's been okay, not bad, this last 2 weeks. So I want to showcase those sort of instances as well, and put those on my last video I put up yesterday, on Trader Sync as well. Trader sync.com, the third party to show live trading, to add even more value to what we're doing, just to show what I'm doing as well from a trading perspective. And I've explained it in that video. Anyways, I'm going to shut up, and thanks for watching. And we will hopefully see you in October on the more serious stuff. Later. Have a good day.